think it's worth your time, and then so happy to share with you guys. Let me share my screen. Can anyone see my screen now?
Yeah, I think the stream is on.
Okay, the stream is on. Can you see the article on Decrypt?
Yes.
Okay, great. So, first, I want to share with you guys that, based on the name of the article, we all agree that the crypto price keep going down. So, over 70% or more, both Bitcoin and Ethereum and the rest of the market from going down from its all-time high price, so 70% in November 2021. But there was but we can see some news in October that kind of restore our faith in the market adoption. So back in let's say, so following BlackRock Bitcoin Trust Fund, so BlackRock is the largest asset manager in the world. So they've been taking some initiative to moving forward to support the crypto adoption in August. So August, BlackRock is the first big name who launched their spot Bitcoin private trust to its customer exposure to the current price of Bitcoin. But following in October, which is 2 months later, we see two big names that joining the crypto movement. So first we have Google, and now it will start accepting crypto as a payment for its cloud service. They are now October, but it's only accepting from early next year. And actually, they shake hand with Coinbase to plug into Coinbase and then start taking crypto as the payment for their cloud service. So before that, we know that Amazon Web Service has been very active to show their presence in the crypto world, but now Google, it's also another cloud service provider, is really big that taking on this movement. So the tie between Google and Coinbase, to us, it's probably very interesting. And then and then actually Coinbase, now that they will move all of its data related application from Amazon Web Service to Google. So actually excited, want to see how that turns out. But seeing all the cloud-based service to get into the crypto space is it's very interesting. And then I think we have a discussion. Actually, our team have discussion, and then K2 actually very an advocate of cloud-based service. So it's good to see this movement. And then at the same time, so Google and Amazon Web Service, which is tech giant over internet, but now we also at the same time we see a 239 years old Bank of New York Mellon. It also showing their interest into the space by launching its own Bitcoin Ethereum custody service. So the bank will hold client private key and provide accounting on their crypto portfolio. So last year they launched a Bitcoin custody service in Ireland, and this year they launched both Bitcoin and Ethereum. So that would be interesting. So while we are clinging to the most favorite mantra at Web3, bear markets are for building the crypto movement of big name, like I just mentioned, like BlackRock, Google, and BNY Mellon, does give everyone actually some hope into the future, that we can see that even it's slowed down in the market right now, but with the crypto movement from the traditional business, it show adoption. So that is that's one of the interesting thing. Everest, do you have any comment on that? What do you think on this news?
On the article, so think there's a couple points in this article is quite interesting. Like even though this is not a not a new article, I think this was published probably more than a month ago, right?
Yeah,
It's more than a
it's around
month ago.
October.
Yeah. So the reason that we have this the beginning segment of like every community call to cover some news and some materials that's out there is to also to basically to try to share with you guys where our headspace is in at the moment, like what kind of information that we are looking at and what kind of trend that we are looking at, so that we can uh, basically take those information and use it as a basis to make decision in terms of like what should Hectagon building, what should we do in the coming month and the coming year. So what really interesting about this article is that like the author he really emphasized on the fact that like crypto price is like crypto price talking about crypto price for this year's and potentially next year's is irrelevant, because the crypto price to come down 90%, same as the equity market come down 90%, about 70% for a lot of the tech companies. And a lot of people have their money stuck in different type of equity asset or token assets. But that's also followed like a normal trend of the market up and down. So the market has been up for the last, uh, generally up for the last 10 years, but especially for crypto, it's been really up for the last 12 months to 18 months. So now it's in a down cycle, and it will go up again. But the fundamental that we should really and for the people who really believe in the future of Web3s, I think the fundamental that we should really look at and be really happy about is even though crypto price coming down, but the activities that happening on blockchains is actually still going way up, and we see like big tech companies and also big platforms adopting blockchain and crypto, and that's just generally it's just a good news that will make the market become stronger when the next bull run comes. And not only this article, but about like I think less than a week ago, there's another article that published by Harvard Business Review by one of their PhD students, and they just talk about a case where where central bank, especially central bank of uh, of sanctioned country, should stock up on Bitcoin, because it's a form of assets that easily transferable and it can bypass any sanction. So they make a really interesting case on why state banks, central banks of every country should consider buying Bitcoin as one of their reserve assets aside from gold and US dollars. For central bank that stock up on US dollars, that bank will be completely dependent on the US economies, and the US, they really like to sanction people. And that will make it hard for country to work. For gold, it's very independent, but it's also hard to store and also it's hard to buy and sell all that stuff. But Bitcoin, it's completely decentralized, even though the price is volatile. But if the state banks of different countries buying Bitcoin and treating Bitcoin as one of the reserve assets, that will actually help the price become less volatile. So I think the fact that these conversations coming out and from the different reputable organizations just pondering on like why certain things should happen, that's really bullish for crypto. Not in the immediate terms, but its own show like more and more institutionals see that cryptos and blockchains as some really useful use case in the world. And
Yeah,
yeah,
sorry. Thank you on that. I think what you say just clearly, like share with everyone that, like instead of focusing on the market's movement right now, let's take a bigger picture to look at into the market and then see the institution and then all the big names, like view crypto and also blockchain in a bigger picture, and then that is how we're moving forward in this market, in my opinion.
Yeah, I think this kind of news is not really relevant for like everyday life of any one of us, for example. But it's like once in a while, yeah, we should just like take into account of these bigger news movement that happen like way out there uh in these institutionals that will eventually uh trickle out, and eventually like every individuals will see the effect in the future.
Yeah, that's great. So, so that's the news that we want to share on more on the institutional side this week. Another one that we want to share more. It's so this is an article that we came across. You know, it's a while ago, so it published in May. But because now we go back to this article because we just elaborate from my point say earlier that bear market is for building. And then, at this point, the whole of Hectagon team, we sit down together and then we say, like, what is why we build in Web3 and then what is the advantage. And then this article really something we really want to share. It probably will be our, motors, now ethos in the next few months, like when we taking into account what we are building for our for our product, for the platform, and then like what is where we are, and then what is the contribution we make into the space. So these articles it's point out some like a point which is very interesting in terms of like data ownership and also interoperable infrastructure layers. So here I just going to quickly read through the summary here. So the author of this article from Harvard Business Review mentioned that a major change is coming to Web3 because today a dominant platform like Facebook, Meta, that's the new name, have gathered their user data, and that has been the advantage to the network effect. So you cannot, like when you operate on Meta, you have to stick with them, and then it makes you stay, and then you cannot switch to another platform because of the amount of data that they have over you. So basically, as the user, they have way more advantage. But when we, and then but for Web3 model is that proposing a new value proposition to user. I think many of you probably agree with me that the it's the power of, as the user, instead of the platform having full control of the underlying data, user creator can own whatever the content they created, and as we call like ownership of underlying data. So that is one thing. Let me move down here. There's some point it's very interesting. So which that creates a very strong advantage. So it's a major shift that change how digital company operate. So user or creator have the ability to take the data from one platform to another, introduce a new source of competitive pressure that likely to require any project or any company need to update their strategy. If you don't like a platform, if it's not good enough to creating value for the user or the creator, like people will just leave, like user will leave, because that is the beauty of Web3. So capitalize on that technology and also on that concept. It really make it easier for company or new entrant to incentivize power user to move. So like you can in Web3 model, you can really compete based on like building really strong user experience. So for example, like in here, there's a new trading platform for NFTs called Looks Rare. They recently launched, and they have what they call vampire attack, that rewarding people for switching over from the dominant platform OpenSea. So even OpenSea is the biggest one for NFT trading at the moment. But if they not good enough, and then if Look Rare is a new platform that launched something, provide more a more advantage, like more value to the customer, they will not leave. So company in Web3 really need to focusing on building their values and gaining those advantage, and then they really need to be on top of their games. So that is one thing on ownership of data. And then the other thing this article point out is the dynamic of Web3 actually less zero sum, which means that platform overall value creation opportunity can overall be bigger. So because of Web3 structure in a way that building on an interoperable infrastructure layer make it easy for platform to plug into a broader content network. So by expanding the scale and type value they can provide to the user. So let's move here. I think this so it because of that interoperable infrastructure layer means the cost of creating user trust are much lower in Web3. So that is one thing that's making Web3 really stand out because of this infrastructure layer. And that is those 3 points that pointing out in this article. But one thing is also pointing out that even though we can see there's a lot of advantage of Web3 in here, but it's still been built and configured in a way that really designed for tech-savvy power user, which mean that you need to be in the space, you need to know how it works, you need to know how to see the transparency, you can see the transaction, but for ordinary user, which is have a limited understanding of what an app or platform can actually do, it will be difficult for them to break into, to know how to vet the source code, to verify the function that we claim that Web3 is good about. So we can see the opportunity, but we also can see the limitation here. So the opportunity, we need to take advantage of data ownership and also the interoperable infrastructure. When with the infrastructure, you can do 2 things actually, either to plug into other platform to work, but also for the community to co-create and build upon. But it's still very difficult for for mass adoption. So that would be something that give an idea for all the builder out here, that somehow we need to try build a product but try to eliminate the barrier that let make Web3 more accessible and more understanding for normal ordinary user, for an average consumer, because right now it's still structured in the way that you need to be in the space for certain time. You need to be if you are a trader or you're a builder, probably easier for you to navigate the space. But for someone have no clue, it's going to be very difficult. That's why it also linked to the previous article that we say, with the support of the institution and then big brand to bring more awareness. So if from the inside we build product and company that really easy to understand, and then that from the inside, and then the institution, and then the market adoption bring more people in, that is how the space will grow. So you can clearly see an opportunity here. So later in the article, they also stress on the infrastructure layers when making a platform back-end open and interoperable can enable compounding innovation and incentivize direct investment in building infrastructure layers. So I would say in this article, the author is really in favor of supporting, like encouraging the builder to look more into the advantage of an interoperable infrastructure layer can bring to the Web3 space. So that is the overview. That is what I scanned through, and I think it's very interesting. If any of you guys in the audience that are a builder looking for ideas and or looking for direction, highly recommend this article to read. We will share more. We will share the link later on. Actually, I will read another paragraph in here that I think it's also very interesting that I want to highlight as well. So sharing ownership allows for more incentive alignment between products and their derivative, creating incentive for everyone to become a builder and contributor. The underlying technology standards also enable every Web3 company can be built upon. This means the community around platform can co-create in a way that much less adversarial than in the past, and with more derivatives in the circulation, making the platform ecosystem grow even stronger. So still the underlying technology and the ownership, and then how that inside with the community. So there is some, like potential here that for any builder out there, any builder in the audience, like want to grab your head around and then want to navigate your next step into the space, it will be interesting. So that is my overview. Everett, you have any input on this? And then, I believe that as a team, we also discussed many of the points in this article to further shape the way we develop Hectagon.
Yes, yes. Katie, do you mind if I share my screen?
Yeah, sure.
Yeah, everyone can come to my stream there. So the first thing about this article is, again, this article, they published it, I think, around like May or June of this year. So it's not that new, but that it doesn't matter. This kind of article is not about the news. So what's interesting about this article, like on the key point, Katie, you has covered. But for me, what really interesting about this is, like, if you just want like one article to read to understand the ethos of Web3 and why, like, a lot of people just talk about Web3 is like it's definitely going to be the futures. This article do a very good job of like collecting all of those into one place, like into the same articles, like all the reasons on why people think that Web3 is the futures is outlined in here. Like if any of you guys in the audience has been follow crypto for a long time, you might read some of the part in this article and you might say, okay, these are not new idea. I see it somewhere else. Yes, so you definitely see part of these articles somewhere else, because this article, it doesn't bring anything completely new to the table. But what it really useful for us is that it bring everything into one place. And so it's a really highly recommend read from us. Another interesting things about these articles when we circulating it around is that we get some feedback like, okay, this article is really nice, but like its own theory, like its own theories, is there any actual protocol that is not a marketplace or a exchange that is really building something useful on Web3s? So, and it doesn't seem like so in its own theory. And actually, that's also the point. That's the exciting point for anyone who are a builder. If you build something on the internet or in Web2, most of the thing that you would like to build, somebody's already built it, and somebody already built $100 million companies, $1 billion company with that idea. But with Web3s, a lot of these ethos is really nice and it is really for the futures. But at the same time, there's very few product that actually realizing these visions that make it simpler for a normal everyday users to use. So that's the exciting part where anyone who are builders that come to Web3s, can basically just go crazy with your ideas and build things that completely new, because there are not a lot of things on Web3 at the moment. So another, like, related to the article, another thing that I would like to share with you guys, just so to give everybody a perspective of the current state of Web3. If you go to DeFi Llama, which they track like different data of different DeFi protocol, or you can see like the top. If you scroll down to like the top 40, the top 50 protocols, and you see what's and you can see two things. One is that everybody is doing terrible right now. Like even the biggest protocol like Ethereum's or BSC's, their revenue is real small. Something happened with Curve. They had $143 million in the last 24 hours. It's really small right now. That's basically tell you about like the usefulness of the different service of different service on Web3 right now, which is not very useful, like very small revenue. The second thing that you will notice is if you look at the categories, it's basically always it's DEX or chain or NFT marketplace or lending. So those are just the four main things on Web3 right now, and that's basically it's like a financials market. Uh, Whereas, uh, Web3 is supposed to be about more than that, about like useful service for normal everyday people. So so that's what I find is quite interesting to talk about, like the futures of, like, there's a big market out there in the futures, but like how to build a product that help people realize that vision. That's the challenge, and that's also what's exciting.
Everest, when you have the screen, I would just let you, like I would let you share the screen for the next topic. So yeah, I would love to have that. So actually, so for the next news that of the market update that we want to share with everyone, it's we also noticed that Q4 actually have a record month of like October as a record month for crypto criminal. So in October, Solana-based Mango Market loses $100 million in hack. So that's also one news. And then in November, which is just a month later, so RVA Sandbergs, the hacker was identified as the one behind the Mango hack. So he hacked like Mango markets in October, and then he also attempt to take on the 3.6 billion crypto lending platform AV in November. So although he failed in November, it still served up a very interesting chapter on for on-chain crypto slew. So you can see on the screens of Everett that the article kind of like sum up the and then sum up the how the hack happened. What is so that's obviously a bug into Solana based like Mango Markets project. Yeah.
Yeah. So this story is more just a quick little bit of entertainment for everybody before we go back to updates on Hectagon. So essentially in October, there's a very interesting. It's not really a hack. It's just an exploit of a design flaw in the system, where Mango Market is a DEX on Solana, and it allow people to, it works a little bit like make a DAO and die, where it's allow people to put in collaterals and then withdraw different kind of assets. And what's interesting is, so this kind of case clearly showed that the extent of market manipulations that people can go through with the crypto market. Like this guy, he's just he's using a flash loan to buy in the collateral that he put in into Mango Market, and blow up its his collateral to about like 100 times more valuable than what it actually was. And with that, he withdraw all of the assets locked on Mango Market. That's how he make it away with like $100 million. And then a couple weeks later, the same guy, he sent out a threat to Aave, and he tried to attack Aave in the same way. That attack on Aave is failed, but it's also leave you with a very interesting read of like how some people making money just exploiting the system on crypto. Yeah, yeah, Katie, I think we can. Yeah, that's a very interesting story. I think we can also go back to uh, covering some investment from Hectagon if you like.
Yeah, sure. So yeah, I'm just about to say it's been having like it's been a 30 minutes of chatting about the market updates and also what's news, what is the good news and what is not so good news. But I think let's go back to Hectagon and chat more about and then so this week we want to share with you about our investment progress as well, the project that we want to share with you guys. So Avesh, you want to go start with that? So what is
Yeah,
the project that you want to share with everyone this week?
yeah, sure. Let me take it from here. So so this week we only have one, I think is really interesting project that we would like to cover. But before I go into the detail of the projects, I also would like to address um, some of the mindset that we are going through with making investment in Web3 right now. So in the last month or so, especially after what happened with FTX, where like on the biggest guy like Alameda Research, where they seems like they're supposed to know what they are doing, right? And seems like they are supposed to know how the market works, but actually they don't. The the way that they make money is just front running everyone else, and that's also calling into questions of like the the model token on Web3. Is that really mature yet for investment, or is that like worthy of investment yet? Because as you can see on DeFi Llama, like on the best performing token as well as best performing um, protocol in terms of revenue, it's just still DEX, NFT marketplace, and chain, and that's it. So that's not a very diverse ecosystem. Whereas we are making investment into like all sort of different areas. So that's why we are kind of slowing down in terms of like reviewing projects to make investments. And also, if you guys notice about like the style of investment that we make so far, most of the like the two investment that we have made so far is mostly like hybrid between a Web2 business model and a Web3 business model, where on the Web2 side, it's kind of clear to us on what value they bring to the clients, and it's easier for us to verify that okay, the company is actually making some revenues. So even if they run out of investor money, they will still have money to run their own business for quite some time, and that will de-risk for the investors. And that actually lead to these companies that we are about to show you guys, which is another case of a Web2 to Web3 kind of business that we think is very interesting. And the company is called Yappa. And Yappa, uh, the problem that they are solving is like if you go to a website like this website, for example, um, what you can see is that normally there's going to be a pop-up that will ask for the users to like which kind of cookies that they will allow, and also there will be a bunch of ads over here. But nowadays, most browsers, they first of all, the EU, that's like for years now, the EU's has forced on this website to not automatically install cookies on the on users browser, and they have to ask for permission. But recently, browser like Brave, they also block that message as well. So it's become harder and harder for um, for platforms to gather user informations. Um, and that's both a good thing and a bad thing. The good thing is that users become more can browse the web more private. But the the bad thing is that um, service is not as customizable as it's not customized to the users as it used to be because they don't have that data. So what Yappa allow users to do is essentially they build another browser wallet that allow anyone to install that plugin and then opt in into a program where they can where they can explicitly allow Yappa to collect their data, and and that data is actually will be according to the team, that data will be stored with Polygon ID and allow for people to allow the users to just customize on what kind of data Yappa can collect and what kind of data Yappa can sell. And that's lead to the business models where after Yappa collect those data and they sell and they sell they do analytics on the data and they sell the analytics. Users will actually get a share of that ads revenues. So essentially, it gives users the powers to decide whether or not you want to capitalize on your own data. Now, so for us, when we talk to the team, like the problem that they are identifying is actually the problem they're identifying make a lot of sense because advertisement will still need to happen. That's the way that people discover new product, and that's the way for product and service to reach users. But at the same time, the way that platforms just collect user data and then sell that data without any benefit to the users is also wrong. So what Yappa present here is a middle ground where the users can decide whether or not they want to sell their data. If they want to sell the data, Yappa can be the middleman to help them sell that easily. And the reason that that Yappa has an advantage in doing that is uh, it's because of before they start this crypto project, they are actually they has been running their business in Los Angeles and in UK. They have a Web2 counterpart where they allow users to send in questions and send in comment and opinions to different podcasters. And they have about 2 million users on this platform. And that's also the reason on why Polygon is really like allegedly Polygon is very interesting in working with Yappa because they have 2 million users on their Web2 platform, and they plan to bring that 2 million users to Polygon through their Polygon IDs program. Uh, so a lot more information about Yappa can be shared with our communities, and um, Jean, our investment analyst, she has done a great job in collecting all these informations into a easy to read format for anyone who want to read more on Yappa as well as reading more on their progress. Um, and um, and yeah, I think those are the main key points. So this company is currently we are having so far we have about 2 meetings with them, and we have 2 meetings with them, and we have a call to look at the demo. So currently the demo is more like a UI UX built on Figma. So we're not sure like when the full products will be ready yet, but those will become more clearer in during the due diligence. Yeah, in the from all the business that we review in the last month or so, we think that Yappa is one of the more interesting ones since the problem is easy to understand, is identifiable as a real problems with a good solutions with a clear like with a proven revenue streams that they're already making on web tools that can support for their Web3 ventures. Yeah, so that's the highlight of the team this week, Yappa 5. So what do you think about the team, Katie?
I think it's very interesting. It's very interesting on the concept, capitalize on, like on your own data, which is, we just said earlier that, like what the advantage of Web3, it's all about, like ownership of data, and this one is actually capitalize on that. But I want to ask, like for this project, what is the stage at the moment? And then, we have some of the community members say the idea is quite similar to Brave browser. Mm.
Right, exactly. So Brave browser is the same browser that I'm using right now. Brave is the same idea where they, instead of building just a window plugin, they build this whole browser based on Chromium. Basically it's compatible with Chrome and Chrome plugin.
So it is kind of similar to Brave, like one of our, like on the as Adri mentioned. What do you think that make Japify more interesting than the concept of Brave?
So first of all, Yappa is still a very early business. They have users on Web2 about 2 million, which they definitely can leverage that. So currently, to compare them with Brave is a little bit like too very early. Brave has been building for years now, and but I think one of the advantage for Yappa is that uh, Brave they Brave they build quite early, and uh, and actually, yeah, it's not correct to say not a lot of people know about Brave, uh, but it's not top of mind in terms of web browsers. To asking people to move to another web browser is a like it's a big ask. Whereas Yapify they choose to just do a browser. They start people with a browser wallet and partners with Polygon. That might potentially give them like some leverage in terms of going to market. Um, which I think, which I'm still not, I'm still not sure. Like the concept of wallet as a whole is quite confusing anyway. But like, see, currently there's no better ways for people. Like everybody still need to have a wallet. So I think that's one of the things that a little bit more advantage for Yapify.
Yeah,
Um,
I do agree. I do agree having, partner with Polygon, like to take advantage of the user base, also with their own user base. It may be, it's maybe an opportunity there. But to be interesting, actually, that could be the question you will ask them on the next meeting for the diligence.
of course, yeah. The diligence is, yeah. I mean, I mean, the diligence is a whole question, long questionnaire to verify
Yeah.
their revenue as well. Um, but compare Yapify to like different GameFi, at least like I'm more a lot of the other project. Their business model is kind of iffy.
Mm. Yeah, so I think, as a marketing person, I think the concept of Shopify it's clearly intriguing. Um, what is the stage at the moment? Like, what is the plan for launching and stuff like that?
Um, so so Yapify is like it's like a Web3 extension of this platform, which is
Mm-hmm.
Yappa app. Yappa app is a Web2 platform where it has been ran for a couple of years now. So they still gain users through this platform. In terms of the Web3 parts, the most recent demo that we're looking at is a UI on Figma, and we haven't went through and checked the GitHub to see what's the development status is. So like I said, it will come. more details will come through the during the due diligence. But I guess it will be about 2 to 3 months before they go to market. Another highlight about this team is they are, since they've been in the industries of in the related industries on in Web2 already, so seems like they're doing a very good job of getting like new partnerships and new advertising partners to sign up on their platform. Recently, they said that they signed up IGN, the gaming website, IGN, to commit to pay for advertisement on Yappa platform. So anyone who want to use their wallet in the future, there's there's a revenue stream coming in.
Yeah. So it's already have like partnership and like revenue kind of lock up there.
Yeah.
So it looks kind of solid. So I think they have a lot of advantage to kind of like going from Web 2 to Web 3. A lot of thing in there I would agree with what they do. So yeah, it'll be very interesting to see how this project goes along, and then to get more updates from the investment team in the future.
Yeah. I think we can end the community call with a little bit of update on something in Hectagon. That's related, that I think everybody is interesting to know. So one of the thing is we in the two project that we're investing in, Fancy is actually they already listing on DEX, and the token price that we buy is about 0.4 cents. And currently on the DEX on tons, the last time we checked, they trading about like 0.2. So currently we are about 5x 5x in the profits, unrealized profit, of course. But that's still a pretty good result. But I think a lot of you has been asking K2s about the about the future token and showing the future token in the treasuries to show that investment. So K2 and his team is currently working on that. That's actually another point on Web3. Like all the data is there on the blockchain, but for normal people to actually look at the data, it's not easy, right? It still needs someone to build the UIs, so for people to really easy to navigate and understand those. So I just want to give that quick updates on Fancy and the credit token timeline. Probably in the next week or the next 2 weeks, you can go on the Hectagon apps and see that token in the treasuries and show the market price of that token, so that you can track the performance of the investment treasury there. So that's one of the.
So we have a new question from Dre.
Yes.
So let's say thank you for Everett for sharing the new with Fancy. We will wait for the update from K2 and the team. So before we finish the call, we have a new question from Dre. The question is, what's your opinion about the recent event affect Solana in mid and long term? I see still many Solana hackathon event happening at the moment. Thank you for the question, Dre.
It's a shame that K2 is not on the call today. He's actually part of the he's actually participating in with the Solana super team in Vietnam. So my personal opinion is that Solana is still going to be one of the strongest layer one ecosystem to build on. There's a couple of reasons. First of all, they still have a lot of money to support their own ecosystem. The second thing is they still have a lot of fan and hype around the ecosystem. But Solana's and a lot of different blockchains will run into similar problems with each other that is a bigger theme of the Web3 market, which is like if you notice, like most of the innovations on Web3s come out of Ethereum and an EVM chain. And the reason that it come out of Ethereum is because the most of the money is locked on Ethereum. So that's where people can make the most amount of money. So that's why people would like to go to and build something new and make money from there. And then on every other chains, is majority of the app that running on other chains are like copy and paste of the thing that already happened on Ethereum. And Solana, because it's run on a different coding language, a lot of the app that is available on Ethereum doesn't get doesn't get copied to Solana immediately, because like the kind of app that get copied immediately are the kind of app that people know will make money, like the DEX and the NFT marketplace. But like different kind of the apps that isn't proven to make people a lot of money, doesn't get a lot of attention or a lot of um, attention to bring to different chain. And that's not just a Solana problem, but that's like every blockchain problems of like how to get actual builders to go on the chains and build something useful for people to use. And that also come back to the HDR article that we shared earlier. The common sentiment is that a lot of the solutions on blockchain right now is building for developers, not end users. And until there's product that will cater toward end users who doesn't know anything about technical of finance, uh, like it's not going to be a vibrant ecosystem. So yeah, so that's my take on Solana. But essentially, Solana is still a very solid ecosystem with a like with one of the best chance of growth. That's not commenting on price though, because the price of Solana might be too high compared to like some different chain. Okay, do you have any take on it?
No, I'm good. I totally agree with you. I don't have any better comment than what you just say. And like Dre, which is agree with me that it's also a great view. Thank you thank you on that. Actually, what you just said, it kind of wrap up our community call this week. So thank you for everyone for tuning in. We will share some of this article like in the community chat. So anyone who wants to have, like to have a read, happy to share and happy to chat more. But yeah, we're really happy to share with you guys and have you guys join us for this community call number 16. So that's it for this week. See you next week. Thank you, everyone.
Yes. Thank you, Katie. If K2 coming back for the next week call, we can cover further on a little bit on like our view on how hackathons and generally different protocol can make money on blockchain, and that can give you guys some hint into our new directions as well.
Yeah, let's do that next week. Thank you. Thank you,
Awesome.
everyone. Have a great weekend.
Bye, Katie. Bye, everyone.
Bye.